Now is the time for all good traders to learn the secrets to picking good markets to trade. Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your daily update for the major markets. Yesterday we discussed stuffing gold bars into fuel tanks and how America doesn't run on gold. In fact, it runs on number 2 diesel fuel. Today I want to talk to you about finding winning trades using some tools that you have at your disposal 24/7 with Market Club. What I'm talking about is our remarkable trade triangle technology and how it can help you spot winning trades and major trend changes in over 375,000 symbols. The symbols list includes all stocks here in the US, Canada, and Australia. Also includes futures, Forex, and precious metals. In today's video, we'll be examining in more detail just how you can implement our trade triangle technology in your own trading and how easy it is to use. Okay, enough of that. Let's get started and take a look at what's going on in the markets right now. So we're going to start off, as always, with our portfolio manager. Starting off with the S&P 500, you can see it's a 55, 55, and a minus 60. It indicates that all of these three indexes are now in a trading range and not in a strong trend. And we click on the chart. We bring up the first one. This is the S&P. You can see this market's really going since about the 14th of September, 13th, 14th of September. This market's gone nowhere. So in essence, you can just draw a very simple box around here. And the box would just be from, let's say, around here to here. And that's just like a trading range. It's just not really going anywhere. Plus, you've got this indicator right here down to the lows like it was back here. And back here again. So we're getting close to an area where the market should begin to find support, and we expect to see it bounce probably back up from these levels. But certainly the 1430 level is the key level to watch. And let me just reiterate that and put it on the screen. So the key level, in our opinion, is 1430. Okay, that's 1430. That's the key level, which is right here. If we break through that level, it's going to change the dynamics somewhat in this market. So let's clear the screen and go to our next market. That's going to be looking at the Dow. And the Dow is really not, pretty much the same picture there. Not performing too well. It's sort of moved sideways. And we may see a little more pressure, but we're right down into an oversold condition. But again, the same pattern. You can just draw from the highs to the lows there, and you get the idea where we are in terms of a sideways pattern. And also you've got a support coming in an oversold condition. So again, you have your 55 reading here, which means it's a trading range, and you're oversold. Now in our latest Traders Whiteboard, we show you the three things a market can do, and one of them is to go sideways and the tools to use in a sideways market, and one of them is in fact a Williams %R indicator. So let's move right on to our next market, and that's going to be the Nasdaq. Now the Nasdaq doesn't look quite as good, and let me explain why. Because I think you could say theoretically that we had that kind of trading range there, and we sort of moved out of it. So we've got maybe a bigger trading range, which you could just sort of escape right here. And certainly that would be something to really pay attention to, because that's, if we go through that, then we're going to see a lot more downward pressure. But we're in this situation where we're oversold on the Williams %R, indicating that we could see it potentially pop up from these levels. So let me just clear the screen off for a second. I know you couldn't see that for the moment, but let me just move this down. So you can see we're very heavily oversold on the Williams %R, and if you look at where we are now, we're getting to an area where the market should probably have a bounce somewhere along the line here. Now we do have the debates this week on Thursday, which is going to be obviously have a major impact on the markets, I would think, on Friday. So we'll see what happens. But anyway, let's clear the screen, go to our next market. And the next market we're looking at is one we spent a lot of time on yesterday, was the crude oil market, and of course it's doing extremely well today. Big move yesterday, followed by another big move today. It's not quite out of the zone yet, and again, you've got that sort of area that's just around here. So it's still in a range, but the one thing that's interesting in this market, and I want to share with you, we talked about this earlier, and the reason we were bullish on this market is the fact that we had our Fibonacci retracement. So we're going from the top here down to the recent lows here, and you can see how we just sort of got into that zone very close to 50%, 61.8% area where the market should bounce, and that's what's happened. Now we can clear that off and go the other way and on the upside and just say, okay, where are we going to go to on the upside? Well, certainly the 96 area, 94.75, 96 area would be a natural, but I think we're actually going to go higher than that, because here's the reason why. Because we've got our trade triangles. The one thing that's interesting here is that you've gone into a mode, a plus 75, which is the beginning of an uptrend. You've got your major trend, which is the monthly, in a positive mode. Only the weekly is the one that's sort of lagging here. And I think once we get out of that zone, get to a positive, then I think we'll get this market really starting to rally on the upside. And again, you're talking about a very volatile area, the Middle East. And also Venezuela now, with Hugo Chavez being re-elected, and what he's going to do with his oil. Now, Hugo Chavez of Venezuela sells a lot of oil to the U.S., and if that were to stop, then prices would still go higher. So I think we should be very, very cognizant of that. And this may be the new world gold for everybody. So let's clear the screen, go to our next market. And that's going to be the US States, USO, that's the ETF, USO, which is the United States Oil Fund. And that's, of course, reflecting pretty much the action in crude oil today. So moving on to the Eurodollar. The Eurodollar is sort of moving around, really not doing too much. Kind of, you've got the long-term trend line here from this level right here. You can scope that up. You can see how it just sort of is still in play in terms of support. We talked about this before. Certainly the 128 level takes on major importance, and that's right here. If we break below 128, we'll break below this trend line, and I think that would augur for a lot lower prices coming into this market. So let's just put our Fibonacci tool in, excuse me, and see where that pulls us right in. So let's just take a look from the Fibonacci tool right here down to the lows, and you can see if we break the 128 level, we could very easily get down to the 124, 124.50, 124.75 level, which is a 61.8% retracement. So moving along to our next market, that's gold. Gold again continues to sort of meander along, not doing anything. You've got the sort of like a broad trading range here. We on a micro level, and I'll show you what I mean by a micro level, is if we get a, let me just go to a micro level, let's get closer in here and just move that back up. And let's go to like a 1 month chart. So if you take from the highs, we mentioned this in our blog, if you go from the highs clearly here to the lows right here, and you can see we got to the 61.8% Fibonacci retracement, which is right around the 160 level. It's not far from there now, as a matter of fact. So we may pop around here for a few more days, but I would not be surprised to see another move up, especially if we see some of the inaction, kicking the can down the road, whatever you want to call it. But generally speaking, the short term, very, very short term, is still negative from 1771, while the longer term and intermediate term levels are pointing higher. So again, the trend is higher in gold, and let's not forget that. So let's clear the screen, go to our next market, and that's copper. Copper is really just reflecting industrial. We need more space than that. Let's go to 3 months. And again, copper is pretty much the same as some of the other markets. You've got this sort of broad trading range on the upside and the support coming in on the downside. So again, I think that this level that we're talking about, which is going to be the lows right here around the 3.68 level, if we break below that level, I think that's going to be really a problem. So 3.68, if we close below, break below that, it's going to present more problems for this market. So let's be a little bit careful there, depending on what happens to the equity markets, of course, which copper plays a major part. So let's go to our next market. This is silver. And I'm moving through this pretty quickly because I want to share with you. This, by the way, is a bogus ticket. Never traded down here today. So you've got the level we're looking at in this market. Again, is that sort of sideways action right there. And if we break out above 35, close over that level, it's on the upside. and if we close below, let's say 33.50, then it's on the downside. But generally speaking, we are getting to an area we're not quite oversold yet, but you can see we're getting down towards the low end of the range, and I expect that will be a case. But the major trend in silver is positive, while the intermediate term trend and short term trend are both negative. And you also have this minus 70 indicating that you're not quite in a bear market. You're sort of, it's getting softer as we move along. So let's clear the screen and look at our next market. In fact, what I want to do is actually go into our trade triangles, and we talked at the top of the hour how we want to look at these markets using our trade triangles to find winning tools. So let's winning trades rather. So here we are. We're in the equity markets, but if you click on here, you can see we cover foreign exchange, futures, indexes, mutual funds, ETFs, penny stocks, Australian stocks, and Canadian stocks. So your choice is really multi choices for you in terms of what market you want to choose. I'm going to stay with the equity market just for now. And we're also in equity, I always like to see a lot of volume. I don't like to trade stocks that trade a little bit of volume because it's really, you're at the mercy of the market at that point in time. I really want to be in a market that has a lot of liquidity that I can move in and out of without affecting the price too much. So we're looking at weekly trade triangles. I'll show you the advantage of that, and then I'll show you the monthly trade triangles. So we want to search today. So I've already done the search, and it's very simple. You just click here, scan, it scans, brings everything up. And what it's looking at right now is it shows you the triangles. Now the triangles, first one is Facebook, of course. Short-term daily down, and the weekly is down. If you just mouse over these levels, you'll see it kicked up today. A weekly kicked in, indicating further pressure on Facebook. I mean, that's just the way the triangles are showing you right now. So that signal came in today. We already knew that the longer-term trend was down, and that was from some time back. And that's the important thing to look at. Let me just move this. So the long-term trend lines, kicks in. That was from the what was it, May 21st, that kicked in. And again, it just shows you the trends don't change that often. Agilent Technologies, again, that's sort of kicked in today, I think. Let's just mouse over. Yep, that's today's signal, indicating further downside pressure. And as we go down here, you'll see some triangles that are red and green, mixed. So what it means when the monthly is up, there's all these triangles down here, it means the bigger trend is on the upside. Okay, the longer term trend is positive, but the short term and intermediate term are negative. Now on stocks, you only want to really be concentrating on these two elements, and that is the weekly and the monthly. Don't worry about this column right here. This is not a column to be even looking at in terms of the daily. It helps, but it's not the most important element. So that's what you want to be looking at, the weekly and the monthly. Monthly for trend and the weekly for timing. Now clearly, if you see, let's just clear this off for a second. If you see a monthly that's up, well here, let's just do this. These are all positive, and you can see the little yellow highlights there, indicating these are signals that just occurred today. And if we clear the screen and go mouse over, you'll see what I mean by that. So if we're looking at Costco and FedEx. These are signals that just occurred today. So if I go over with my mouse, you can see right here, this is a green weekly trade triangle at 103.51 occurred today. And that's a buy signal. Okay, 103.51. The market's currently trading 104.14, so we know it's doing well. We'll look at the chart in just a second. Moving on to FedEx, we mouse over there. The yellow's there already. Green weekly trade triangle at 90.09. That's 10.10. That's today, and it's 90.20. So both of those signals are positive for the day. And I'm just going to look at a chart here on Costco. And you'll see the signal came in today. Just give me a second here. So you can click on the blue. And here it comes. So here's Costco. We have only our monthlies in. If we scope this out, you can see we got long monthly. This is June 19th at 92, and it's currently trading 103. So on a leverage basis, you would have made about 20% on that. And if you put in our weeklies, just click here, boom, and you can see the weekly kicked in today at 103.51, currently trading at 103.98. So again, this is all how we trade in this market. And just to give you an idea, this is the monthly, so this would be a buy at 92.10. If you're an intermediate term trader, you would have gotten out here at 94.51. That's about a $2.40 profit. You got back in the market here at 97.19, and you'd be out at 99. So you have made a couple of dollars in each of those trades. You'd also be long right now. Now, if you're a longer term trader, of course, you just stay long, and that's how you would trade. But anyway, that's one thing to look at. And moving back, let's take a look at the FedEx and see how they're doing as well. Here's the chart on FedEx coming up. And you can see there's the weekly signal coming in right today at 90.09. Now FedEx has obviously had a pretty jagged thing going on here, but the monthly is from 92.85 is still positive, so you're getting actually a better price. And sometimes these markets can fool you, and even when they're moving sideways like that. If we go back on a maximum on this, you can see, we'll close this out. You can see this market could be making a very strong base to go higher. Certainly move over 100 would get this market pretty excited on the upside. So anyway, that's how to use our trade triangle technology. Just click here, you get to your position you want to be on the trade triangles, and of course you can search for anything you want: foreign exchange, futures, indexes, mutual funds, ETFs, penny stocks, Australian stocks, and Canadian stocks. You can also look at different monthly trade triangles, weekly trade triangles, and daily trade triangles. Also, you can look for plus 100 chart analysis, very strong trends, or markets that are just emerging into a trend on the upside. Plus 75 is an emerging market trend, and sometimes that's very, very good to look at. So anyway, I'm Adam Hewison. I'm taking a couple of days off. I'm going to London, and I'll be back probably on Tuesday. So in the meantime, Jeremy Lutz is going to be taking care of your updates. So have a great day trading. Don't forget to watch the debates. It's going to be a very exciting debate, I think, for a lot of people. And of course, our country's futures rely on these debates. So I'm Adam Hewison. Have a great day trading. I'll see you on Tuesday.